Let me ask you something. Are you nervous about picking the wrong lender for your first mortgage? What's the part of the mortgage process that stresses you out the most? Rates, paperwork, or just not knowing where to start? No matter your answer, you're not alone. I've seen buyers lose thousands of dollars in higher rates and fees and even lose their dream homes because their lender couldn't move fast enough. But here's the good news. In this video, I'm going to break down the real differences between banks, credit unions, and mortgage brokers. What they do well, where they fall short, and how to figure out which one is right for you. Stick with me and you'll leave knowing exactly how to choose a mortgage partner who saves you money and gets the deal done. My name is Justyn Nixon, and I work on both sides of the table as a mortgage advisor and as a real estate broker. I've helped many buyers through this exact decision. Here's the plan. We're going to look at each option, banks, credit unions, and brokers, their pros, their cons, and the hidden traps you need to avoid. Then I'll give you the insider tip that's more important than which type of lender you choose. By the end, you have the confidence to shop smarter and avoid the expensive mistakes I've seen too many first-time buyers make. Here's the challenge most first-time buyers face. The mortgage world is confusing. If you go with the wrong lender, you could be stuck with higher rates and fees that drain your savings, a rigid approval process that rejects you if you're not a cookie-cutter borrower, or worst of all, delays that make sellers ignore your offer and hand the house to someone else. And let me share a quick story. I once worked with a first-time buyer who went through a credit union. He was approved, or at least that's what his loan officer told him. We found a home, got under contract, and he paid for the inspection and appraisal, only to find out later he wasn't actually approved. The loan officer hadn't fully checked his work history, and when underwriting reviewed it, the whole thing fell apart. He wasted time, money, and worst of all, lost the house. I felt awful for him. It was his first home buying experience, and it was ruined because the lender didn't do their job up front. That's why choosing the right partner matters as much as choosing the right house. Big banks are convenient. You probably already have an account. They got every loan type, and their apps are polished. But the downside, they can be rigid. If you're self-employed or have quirks in your income, they may say no without looking deeper. And their rates aren't always the lowest. Convenience is nice, but it can cost you. So let me know in the comments, would you trade a little convenience for a lower rate, or do you want the easiest option no matter what? Credit unions are not-for-profit and member-owned, which means their mission is to serve you, not investors. That often translates into lower rates, fewer fees, and more flexibility with real-life situations. The catch? You have to qualify for membership, and their loan menu, it might be smaller than a big bank. Tech can also vary. Some are great, and some not so much. And as I mentioned earlier, the loan officer's attention to detail matters a lot. If joining a credit union could save you thousands, would you take the extra step to qualify, or would you stick with your current bank out of convenience? Brokers don't lend money themselves. They shop your loan with multiple lenders to find you the best fit. Now, this gives you choice and access, especially if your financial picture isn't simple. The two things to watch: brokers are paid by lenders, which may sometimes show up in your rate, and their quality varies a lot. A great broker is worth their weight in gold, and a bad one can tank your deal. Now, would you rather apply once and let someone shop for you, or do you feel better applying at multiple places on your own? So, what's the real answer? Here's the part nobody tells you. It's not about the logo on the building, it's about the person you work with. I've seen amazing loan officers at big banks, flexible credit union reps who go the extra mile, and brokers who know exactly how to get tricky deals closed. I've also seen the opposite at each. A great loan officer at an average institution will beat a mediocre one at the best institution every single time. So when you're shopping, don't just compare rates, pay attention to how they communicate, how clearly they explain things, and whether you feel they're actually invested in your success. That's your real deciding factor. When you think about it, what's more important to you, a low rate or a loan officer you can actually trust? To sum it up, banks equal convenience and product variety, but less flexibility. Credit unions, lower rates and a personal touch, but membership limits. Brokers, widest choice and custom fit, but quality varies. At the end of the day, the right person matters more than the right institution. Find someone who communicates, who cares, and who actually gets the deal done. So here's your next step. Don't just pick one lender. Talk to at least one of each: your bank, a local credit union, and a broker. Get pre-approvals and compare the loan estimates side by side. That way you know for sure you're getting the best deal and the right partner. Which one are you leaning toward, or which have you had a great experience with? Bank, credit union, or broker? Drop it in the comments. I'd love to see where most buyers land. If this video helped clear things up, hit that like button so more first-time buyers can find it. And subscribe for more no-nonsense mortgage advice every week, and drop your biggest mortgage question in the comments. I read them all and would love to help.